Exotic investment products got loads of blame for sparking the financial crisis 5 years ago. But now, as investors struggle to generate returns on fixed income assets, some retail mutual funds are turning to new types of similarly complex packaged securities to get higher yields and protect against risk. But how risky are the products, and what do you need to know about what may be in your mutual fund? Here to discuss is Mark Okada. He's co-founder and chief investment officer at Highland Capital Management. Mark, welcome. Good to have you with us.
Great to be here, Tyler.
You have funds that have in them, among other products known as collateralized loan obligations. I need you to explain for the viewers tonight what they are and whether I should be worried about them. Because whenever I see the word collateralized, because I remember collateralized were a lot of the products that ran into trouble in the financial crisis, CMOs, CDOs, and then credit default swaps, I start to worry. Should I?
Well, you should be concerned when you don't understand something. And the idea about a collateralized loan obligation is something we should discuss. So what really a CLO is, and we did the first CLO, our firm Highland Capital did the first CLO back in 1996, it's just a securitization of bank loans. And the fund that we were talking about earlier invests a small proportion, about 10% of our capital, in the debt of these transactions. What's really important, though, and to the concern that you just mentioned, is that a lot of the baby has been thrown out with the bathwater when we look at the entire collateralized bond market, the CBO market, et cetera, et cetera. And CLOs have been really, I think, difficult to understand because they've been clouded with that whole market. So specifically, we've seen a lot of resurgence in activity in this space because CLOs, unlike a lot of those other brethren you talked about, have done very, very well. The default rate and the loss in that space over that entire history from 1996 to today has been less than 2% in its entirety as far as realized default losses.
Yeah, Mark,
so, yes.
What makes it attractive also, as I understand it, is you do get a higher yield, but the rate also floats. So if interest rates do tend to go up, you get the advantage of that, correct?
That's right, Sue. So we're doing this in a bank loan mutual fund, which a lot of investors are allocating to today because they want to get away from that interest rate risk that they find in their fixed income. And CLOs, just like bank loans, are floating rate. And so you're exchanging one type of risk for another. You're not taking interest rate risk, which right now is really a difficult thing and something you should be concerned about, and you're substituting that for floating rate, which is a great benefit for investors today.
So low default risk you maintain here and have the facts to back it up. What are the kinds of loans that are in these collateralized loan obligations, these packaged securities? What kinds of loans?
Right, so bank loans are just like high yield bonds. They're below investment grade, and we use them in general, called leverage finance, to really finance all of the M&A activity, leverage buyouts, leverage recaps. So when you think about bank loans, those are the type of bank loans that the market is investing in today, but they're also the type of bank loans that collateralize the CLO. One important point about the CLOs that we deal in is that their credit quality is actually higher than our bank loan portfolio. So the CLOs themselves are rated investment grade, so they have less intrinsic risk than the actual loans that are in the collateral pool. And it makes sense because you're secured by those loans and you have equity cushion below you.
Very quickly, who's doing the rating of those loans, and can I trust them?
Moody's and S&P. And so you're right to make that point. And we have an entire business of making sure that we understand exactly what's in all of our CLOs. We're not relying on the rating agencies for our analysis. Our team really rips apart all of these transactions, and that transparency makes us not worry about what we're doing.
Mark, thank you very much. Have a great Thanksgiving.
Yeah, you too.
Mark Okada is co-founder and chief investment officer at Highland Capital Management.